All right, everybody, another Ask Me Anything followed up by another wealth webinar, followed up by another WTF. So if we take it from the top and we go to the bottom, it goes WTF, wealth webinar, and now we get to answer your questions. Some of the folks on here today need a nice stiff drink. So that's why this is the happy hour, folks. Get your questions ready. The Brady Bunch, the TMM Brady Bunch is ready to answer them. We'll be back after this. All right, it's another Ask Me Anything happy hour. I'm going to preface happy hour, and what we're going to do is we're going to get into answering questions. Hopefully we get a live active audience like we always do, and we should have a lot of questions today after that webinar. I mean, we took it back to the Michael Jordan freaking basics. We were dribbling, we were drabbling, we were tripping, we were trapping, we were dunking, we were dipping. And now we're going to be answering your questions. Take it from the top. Shauna.
I'm here, and Gabby made a little comment in the on Facebook about these darn Stanley Cups. I got one because Harper has one, and I just came today. So, Carson's got one too.
There you go.
Love it.
It's just water though right now, and I'm happy to be here. Honestly, I was a headache was coming on, but I knew I needed to tap into this group. I didn't want to make any excuses, so I'm just happy to be here because you guys all have a positive impact on my life. So happy to get into Ask Me Anything today.
Awesome. How about Steven over there? You're typing away frantically. What's happening on your end?
Always busy, man. Always busy. Always someone to talk to. Always a client to help. Always partnership to build. So with that being said, it's a beautiful day. We've had some awesome webinars today. What the F was awesome this morning. A lot of fun. So much going on in the country, in the world right now. A lot of exciting things going on. A wealth webinar I thought was really cool. If anybody was on there, what do you guys think? It's kind of cool to go back to the basics and, do that kind of original 90-minute style presentation. And Chris, I thought you knocked it out of the ballpark, and I'm sure we'll have a lot of new clients booking calls and with our money mentors and, becoming their own banks. And that's what it's all about, and ready to answer some questions now and have some fun. So pass it down to Jason.
Thank you, Mr. Snaggy. Good to see you for multiple times today. And, yeah, blessed to be here as well. Like Shauna said, it's always good to come in here, always get the energy. It's amazing how you can feel worn out and you can come into a group and you can get more energy when everyone is elevating your thoughts and elevating your energy. And Chris called Michael Jordan basic. I don't know if that's ever been the case. So I found that a super interesting choice of player, for example, but I'm glad he went back to the basics. And tomorrow, Founding Fathers Financial Freedom webinar, 3 p.m. Eastern. Come check it out. Teaching new things. Bringing it simple with Sipple every day, teach you the basics of infinite banking and how you can make a positive impact on your family and the community. And over to my brother, Joe.
Well, helping people out today. I went through some of my emails and got a hold of some people that have been waiting in my texts. So my calendar is open for tomorrow, Thursday. So if I didn't get to you and I didn't forget about you, I'm still going to be hitting you tomorrow between calls too to catch up and get you at the finish line. And over to Carson.
There you go. What's up, guys? This is happy hour. We always talk about what we're drinking, and today I want to share with you guys what I'm drinking. It is Relight. You guys ever heard of it?
No, but I'm writing it down.
It is real salt and electrolytes. So it's basically Gatorade without all the crap. So I've been loving this stuff. I drink it every day, basically. So that's what I'm enjoying right now. Life's going good. And nothing else.
I thought we were going to have to get your ID out here. I thought you were going to show us a real drink. And I'll say, wait, are you 21? So it's checking.
I love them. All right. We actually have a lot of questions already. So I love that. Brad Knight, we did get your question right on the dot of 4:30. So Brad Knight saying, recently started 2 policies on my kids, going through the application process for myself. My fiance has about 35 in a 503B that she thinks would better serve her in a policy as well. How is this possible? I guess question is, can you move 35,000 in a 503B over to a policy?
Or 403B. You could, but it's a taxable event. And if they're not 59 and a half or older, there's going to be a 10% IRS penalty. So I mean, it's a smaller dollar amount, but you're still going to get whacked taxes and penalties. So I'd almost say it probably wouldn't make sense to do that. I almost say what you should do with that is roll that into a self-directed IRA and then be the bank self-directed IRA. Don't pay the government any taxes until you take income from it later, and save the 10% IRS penalty by doing it that way. It's kind of the same. It's not identical, but it still gives you that control of your money and allows you to direct where all that money is going to go versus just being locked into a 403B with a couple stupid mutual funds. And who knows, maybe even have Tia Cref, which is even a whole nother bag of wax.
So
with a 403B, is there the opportunity to potentially take a loan as well? Because that would be something if they're taking a loan, or no.
Only if they're still working there. And a lot of 403Bs, from what I've seen over the last couple of years, have not had loan provisions. 403Bs are nonprofit. Usually teachers would be 403Bs, or, professors. It's usually where you'll find the 403Bs. And some have loan provisions, some do not. So I don't know, but they'd have to be an active employee to be able to take a loan anyway.
Well, so we talk a lot about, I don't know. This is an interesting topic with these retirement accounts. This guy, he's in his, I think, late 30s, maybe 40, and his wife is around the same age. So he has time to pull those funds out, take the tax hit, and then grow tax free. That is always something that I contemplate with, if that makes more sense than rolling it over to an IRA and paying taxes when you're 59 and a half. It goes back and forth. So it does depend on what you want to invest in too.
I like that, Carson. I think, it's it depends answer again, right? For Brad. And Brad just clarified she's a nurse and there's no loan provision. So that helps. Is it an existing one? Is she even able to do anything with it? Right. I guess that's probably another question. And then, like Carson said, it's what is your philosophy? I've been thinking a lot about this week. Like, what is your philosophy financially? What is your philosophy in your life? What is your philosophy towards what you want to have happen? Like, if you believe that you can take the money out and do more with it when you're in control of it, then it doesn't really matter what the tax hit is, right? Because you believe that that's philosophically how you're going to operate from here forward, and that'll shape your thinking. Versus, just saying, well, what's the best numerical thing? It's really, what do you believe? And what do you want?
I agree. I totally agree with that. And, I'm always going to err on the side of caution just because I've been doing this for so long. Is, like you tell somebody like that and like they close their 401k out or 403B, they move the money to the policy. Then they forget why they did it. They get a CPA or an advisor that says, why would you have ever done that? You should sue them. That they should have never let you do that or told you to do that. And then you get sued and you're not going to win. So you got to play both sides of that coin.
That's right. Disclaimer, because Gabby's not here.
Yeah, make them sign a disclaimer.
None of us are financial advisors. We're not giving financial advice, and nothing we are saying is to be construed as such. We're just answering questions based on what we think about and conversations we've had.
Mike Dolan, another comment on here, has the same question. He says he has 4 kids under the age of 10. So he's asked if he should stop contributing to his 529 plans and start investing in policies instead. It's kind of same topic.
I mean, this is, speak to a lot of business owners. I think all of us do, right? And they're often paying their kids. If they're doing well, they're paying their kids a salary because their kids are doing something in the business or putting money into 529s and Roths for them and different things. Well, what if there was something that you could use, that you could do whatever you wanted with the money and it would grow tax-free forever, come out tax-free, and you could save and spend, that steal from the banking bros, right? Like with a 529, what happens if your kid doesn't go to college or they're no longer going to that private school, or right? There's just so many variations and your money's going in all these different separate areas. Again, back to the philosophy. How do you want to operate? How do you want to control your money?
Well, how about this question? Does anybody here have kids with a 529? I know Ariana will never have one.
That's a good question.
How about Vivi? Chris, would you ever get a 529 for Vivi? Absolutely
Wow.
not.
Well,
Steven?
Well, hey, let's stay positive here.
well,
People
no,
don't
but I
know
mean,
what
if
they don't
somebody's already
know.
got a 529, it's
I'm
a
just
different
saying.
scenario. Like if I had a 529 for Vivi, would I cancel the 529? No, I would stop contributing to it.
Yeah.
Right.
And I would switch where the dollars go, change that one thing. But I
Move
mean,
around.
like in Mike's case, I mean, he's already got them, right? So he's got them for his kids. It's not the worst thing ever. It's better than
50K
not
is a
having
good
them.
Better than nothing.
total that you'll probably use for one of your 4 children. But now
I would-
But we wouldn't go out and get one to
Oh,
begin
God,
with. We
no.
would put an IBC.
No, but I mean, like, look at for Mike. I mean, he's got 50 grand in there for,
I know.
4 kids. That's a hell of a good start for college, for his kids. I mean, he's definitely going to be able to use that. There's no way he's not going to spend 50 grand on college, for 4 kids. So, but would I stop contributing? 100%.
Yeah, because the better part about the policy is you can use it for anything. So with a 529 plan, that's like it's one use, right?
Just college.
There's basis in it also, and I believe that you can take the basis out as long as you put it in. So therefore, he would be able to consolidate that into one. Maybe he would be able to take the basis out, and I don't know how much the basis is.
529s, they can be multi-beneficiary. I mean, you could repurpose them. Like, let's say one of his kids decides to go to school, the other 3 do not. He could take all 50 and use it for one of the kids.
Mm-hmm.
I mean, they're pretty flexible when it comes to that stuff.
Cool.
But I
I'm
mean,
not
if
sitting here saying I like 529s, but I sold a hell of a lot of them when I was an advisor, so I do know the specifics.
The
about
quick
them.
answer is, or the best answer is
Just stop contributing.
stop contributing. You'll be able to use that up for what's needed, and everything there forward, we'll do a policy.
I'd like to see that. So Florida offers like Florida offers like a 529 prepaid college plan. I'd like to see how that stacks up against like putting the money into the policy instead.
Yeah, I don't know. You'd almost have to run the numbers.
It'd be kind of fun. I mean, because it's like, it's an interesting, just because I've been thinking about it
We have
personally
Florida
lately.
prepaid for Connor. That's something we've been contributing for since he was really young, maybe born. So
this is like a prepaid. So Bryce is in 2nd grade, but so like, I could send him to any 4-year college, or if I paid $27,000 today, he could attend 4 years to any state university.
And when you're talking about like a Florida State or something, that's way more than 27 grand, right? Like,
well, I'm saying, like, I wonder what this would look like, me putting 27 of this today and just forgetting about it for the next 10 years, or, taking that 27 over the next 10 years into a policy, and what that would look like. I know that
You'd
I'm
have to
getting,
just run them
or
numbers.
what if I use one of my policies to buy one of these plans?
Yeah,
Like there's so many different.
that's definitely a way to go.
Yeah. Cool.
But that sounds really good. I mean, to me, that sounds good if you can buy college now, like at that
thank you for
price.
bringing that
Lock
up,
it
Stephen.
in.
I was actually thinking that while we were talking about it, so I'm glad you went there. I forgot you were in Florida for a moment. So,
And I don't know if all states offer that, but it's just something I've been running through my head lately.
I don't think New York has anything like that.
No, why would they? New York's way too complicated. Come on.
Really?
All right, this will be a quick question. Can these policies be used for UK taxpayers?
No, unfortunately, in the UK, we get this a lot. Like, gosh, man, if we could just get the United Kingdom to freaking offer some whole lives, we'd have a whole new market there. But yeah, they just don't have the product. But however, I do have a video. I'll try to find it on my YouTube. I did a video for people outside of North America, and what I'll do, Alpha, is I'll put it in the chat. So just watch for it. But it'll help you with the process. You just can't get the product.
All right, this is a question from Carlos. Is how does private money lending work with people who don't have 100K to start with? I feel that's around the minimum that you guys talk about. And then Dexter kind of chimed in the chat, just giving some help through the chat. But find 4 people with 25,000 or 10 people with 10K. But definitely want to hit on private lending and how much is needed to start, and how you kind of break into that world of private lending.
I think a lot of where that's coming from is probably because maybe he was on a webinar or heard us talking about the Fullers, which is 100,000 minimum.
Yes.
The ROI property group stuff. But I mean, there's deals. Oh my gosh, I just saw a deal on Private Money Club yesterday that was 25 grand. So
So go to privatemoneyclub.com, at least to search around. There are people who do need, 25,000 here or there for certain aspects of the project. And a lot of people, don't mind working with multiple lenders to get the project done.
I can share from my experience as well. I do all IBC, but I do some real estate on the side. And I've been on both sides of it. I've been a borrower and a lender on PMC, and I've lent on some deals and I've borrowed on some of my own deals. And I've personally got borrowers or lenders lending like 25. So there's definitely an option to do less. And if you wanted to talk about the real estate deals I do, you can always reach out to me and we can talk about that as well.
Love that. Thank you so much, Carson. Darren is saying, I would like to start a policy for my daughter. How can I do that? So first question, Darren, is do you have insurance on yourself? Because I feel like sometimes that might be the first stopping point, is if you don't have coverage, then your children can't get coverage.
That is a question. I mean, the insurance company want to see that the matriarch and the patriarch of the family are protected first. Once they know that, then we reverse engineer the kids' policy. But if you're looking just to get started and have that conversation, there's a whole bunch of people that we know that could help you, which is all of us. So Snaggy will pop it in the chat if you're looking to have that conversation. So.
Yeah, so we work with, I think, 5 different carriers. I'm probably the only person who's not a licensed agent, but everybody else on our team is a licensed agent in almost all of the states. So you can get started with us. So that's a I don't know if that's a disclaimer or a personal shout out to the team, but it's like us, pick us. I'm just going to say straight up, pick us, pick our people, and we'll put the round robin link in the chat.
Well said.
The Carvar is saying, hey guys, can you explain how PUA fees cost work?
Sure. I mean, there's a load. So any money that goes into the paid up additions rider, there's a load. It varies. Different companies are different amounts. And hopefully I'm not going to get it wrong, but it's usually like, I think about 6% for most of the companies. Steven, do you remember we just did this with Lafayette? What was the load on Lafayette? I want to say it was 6.
I think you're right.
I think it's 6. And then One America might be 6 as well. And I think wasn't Penn like 10 or something like that, or Penn was super high. So it's going to vary, the Carver, depending on the insurance company, but it's a load. So in other words, the simplest way to look at it, you put $100,000 into a PUA rider with, let's just say Lafayette Life. If their load is 6, you have access to 94%. Essentially, that's the flat and simple of how it works. Out of that percentage, that 6%, the agent will receive a commission of roughly 2% of the PUA. So, when you hear us talk about how, we reduce our commission, or the way we design them reduces our commission by 60 to 90%, that's a large part of it. Because in some of the policy designs, we're putting 75 up to, very rarely will we do 90, but sometimes up to 90. So if you think about that amount is going to the PUA, we're getting paid a 2% commission on that. Of the 6, the insurance company keeps the rest. That's how we're compensated. And then we're paid on the base, which would be, in that scenario that I just gave, about 25%. And then we're paid the regular commission on that. So that's why our commissions are so low. But that's essentially how the PUA fees work. But it does vary company to company. And the companies we use, I think, and I don't know this to be fact, but I think they're the lowest in the industry, which is why they're the best for IBC. I do know some of the other carriers like Penn, which we used to use, jacked their PUA fee up, which really hampered, it hit the high early cash value accessibility of the money.
I love it. So this isn't a question. This is just a comment. So Vince has been, dropping a lot of stuff in the chat, which has been great. He's got about $40,000 right now from what I saw in former chats, but he's like, I haven't started yet. Been watching a lot of content for the past year. I'm going to get a call soon done, but like, I don't know why I haven't. Like, maybe I'm just dumb. But Vince, I want to say I listened to the concept for 2 years before I started my own policy. So you're not dumb for consuming a lot of content. I actually would love to have everybody who wants to, chime in on the chat, take how long it took them to get started. And maybe that's just motivation to get started, because we all have that same feeling.
16 months and 150,000.
That's 150,000 lost because he doesn't
Lost.
listen. I just want to quantify the 150. It wasn't 18 or 16 months and 150 went into the policy. It was 150,000 gone and all that time gone. So
And 16 months gone.
correct. Just making sure they understood that, Joe.
Correct.
I was very quick. I saw, I remember I watched the 90-minute video in my basement and a light bulb went off. I could not get started fast enough. And I think it was literally that next weekend, me and Larissa flew to Mexico to listen to Brent present out in Playa. No, where the hell was it? Playa del Carmen or no, I think it was Punta Cana. I think we were, because I remember surfing that trip. And in his hotel room, I started my policy right there. So I saw everything.
Well, to be fair, the first time I heard the presentation, I wanted to do it too. But then like your mind talks you out of like, you think you're not the person. Like it's like for everybody else in the room, but it wasn't for me. You know what I mean? Like there was something wrong with me and it's going to work for them, but not for me. It took me 2 years to get over that.
That was my question. I lost it. Was it Vince had said that?
Mm-hmm.
My question for Vince is, what is that thing? What is that story that keeps popping up that has you stopping? Because that's really, like Chris said, you get it when you get it. Some people get it right away. Some people, it takes a couple of years, a couple of months, a couple of days. It just really depends. Like Brent took 2 years. He learned from R. Nelson Nash, and it took the man 2 years. And all of his people, docs, like telling him like, hey man, I'm doing this crazy thing. IBC, it's changed my life. It's changed my business. And Brent's like, well, I know one of them might lie to me, but I know not all 10 of them are lying to me. Right. Like, so whatever your story is, Vince, just figure out what it is and give yourself permission to really keep learning. And then you have to take ownership of the truth for yourself. Like that's it. Like I started writing books about this before I even talked to a human about getting a policy. If that's not crazy, I don't know what is.
All right, this question's for Mr. Snaggy. So, in Private Money Club, do you have more borrowers or lenders, or is it even?
I think right now we definitely have more lenders than borrowers. I actually almost know that to be fact. That won't always be the case, though.
There you go.
I was trying to wake Stephen up, Chris, but
He commented. We got him up.
Yeah. Right, so in the name, though, Solutions REI, so you're a real estate investor, spread the word. We have a lot of really good people who are coming to this Ask Me Anything with cash value in their policies. And then they go over to Private Money Club and they're looking to connect with people like you or people like Carson who need to borrow money. So there's definitely an abundance of money. And we just hope that you're, really good to our people because we care about them. All right.
Chris, you going to jump on that call? We'll jump back on, or
Jump on what call?
Inicio.
When is that? Right now?
In 1 minute.
Crap. Is there an email for that? Sorry, folks.
That's okay.
It's in the text. Sorry, I can text you. Go ahead, Shauna.
This is
Okay.
Joe might as well read the question, answer the question, talk about the question. Mr.
I know I came to get filled up today and you guys are just already whatever. But okay. J10 is saying just created monthly cash flow from refi debt into new second lien HELOC. Do I use that extra cash to fund policy, then borrow to pay back the HELOC?
So if you decided that you were going to use and utilize that HELOC for an investment and then just leave it that way and compare apples to apples, then you would use the spread for extra money. So when I describe how do you make free money, it's utilizing the bank as the HELOC. You take, say, $100,000 would come into that second lien, that $100,000, and then I would lend that to Chris at 12%, and say the HELOC was 6%. So Chris would pay me $1,000 a month. I would take $500, pay the HELOC, and then I would have $500 left in my hand. And then he would do it the second month. I would pay the HELOC $500, have $500 in my hand. For, say he did this for a year, and then he would give me my principal back of $100,000. I would put that back into the HELOC. The HELOC cost me $0. I took no money out of my pocket to pay the HELOC. Chris actually paid the HELOC, but I'm left with $500 a month, $6,000 extra in my hand. That's how I would use the second lien HELOC.
Okay.
Apples to apples, and then with that extra money in your hand, that would be the arbitrage. You can do whatever you want with that money. Pay down the debt or run that through the policy or something to that effect.
Okay. I do want to read the question one more time. So just created monthly cash flow from refi debt into a second lien HELOC. So what does that first part mean to you? Like, so they have extra cash flow right now. Do I use that extra cash flow to fund a policy, then borrow to pay down the rest of the HELOC?
I guess I don't understand the question then.
So he's saying take the HELOC, throw it in a policy, take it out, and either invest it to pay down the HELOC or just throw it back in the HELOC altogether, just to get some money in a policy.
Well, you wouldn't want to take it out of the HELOC, throw it into the policy, and put it back in the HELOC. That's creative.
It's going to create like a debt or like a bill essentially with the.
So you'd want to invest those dollars, like you said, make a spread and put the spread in the line of credit.
Yeah, I guess I don't know what he's using that HELOC for. How much money? Did he use it already? I mean, is there credit card bills? There's a little bit more info that I need.
Yeah, actually, Jay, if you don't mind, if you're still listening, which I'm sure you are because you only typed that in 4 minutes ago, give us a little bit more information on that situation so we can go over that a little bit more. Facebook user is saying, what should someone's annual income be for infinite banking to work? I know on like the moneymultiplier.com, Brent says this thing is like, his goal is for financial freedom for somebody who's making $10 an hour or $10,000 an hour. So, I guess it depends.
Well, I would say it's not about an income. It's about more so what you do with your money and how your money moves, what your cash flow is. Depends on what you save, what debts you have. I would say it's more based around that. And to answer that question, I would say you should be saving at least 10 times your age a month. If you're able to save that much, I would say this makes sense. If you don't save anything or you don't know what your cash flow is, figure out your budget and learn that first and then come back to us. But I wouldn't say it's an income thing. It's more of a cash flow thing.
I'm going to call it a discipline thing. Like, I think that was dead accurate, Carson. I'm going to say, like, there's two pains in life, right? I haven't said this in a while. There's the pain of what, Joe? There's a pain of
regret.
And what's the second pain?
Discipline.
There you go. Pain of discipline, pain of regret. You choose. So, like, I've talked to people making 60 grand, but they're saving, a couple $1,000s a month. I've talked to people making 400,000 that can't save $800 a month. Mm-hmm. So where's your discipline at? How much do you love yourself? Are you paying yourself? So that's Carson's answer. And said differently is, are you paying yourself and do you respect yourself? And once you make that change, then we're going to have a conversation.
About a year ago, I had a guy, he was 18 years old, my little buddy, and he was doing Uber Eats, and he says, I want a policy. And he was only making about $15,000 a year. And we managed to get him a policy. And he was putting in, I think, between $300 to $400 a month. And didn't have a credit card. He was trying to create credit. And so we got him a credit card. And after 6 months, he saved up enough of money. He paid off the annual of his policy. And he had 6 more months. He saved up enough of money to do annual on that policy, and now he got his real estate license and he started flipping houses, and now he's going to start another policy with a $10,000 down. So I'm pretty proud of it.
That's amazing.
Thank you for sharing that win. That's awesome. And that's someone who made what? He made a decision to be better. He raised the standards. Here's something I thought of in the opening. If you don't have a big vision, if you don't know where you're going, you're not even on the path to be here and listen to what we're talking about. Truth. It might hurt a little bit, but if you don't have a big vision and really want something big that's bigger than you, that scares you a little bit, you're not even on the path to taking back control and having freedom.
I love those answers. That was great, guys. Bob is saying, can you convert a current 401k into a self-directed IRA? I don't know for a fact, but what I have heard, and I'm sure Carson, you might know more. But I think from my knowledge is if you're employed by your employer is contributing to your 401k, the answer would be no. Or it's very difficult.
Not an active one.
Correct.
Okay. So and that's why, like, let's say when COVID happened, or there's people, actually, if anybody's listening and you had a job change, like, and you are no longer being employed by somebody who was contributing to a 401k, you can self-direct now. So with any type of job change and that sort of stuff, that opens up that opportunity for you. Vince must be 37 because he's saying 10 times your age, 370 for me. That sounds easy. So that's great.
Yeah, man, that's the minimum. If you can do more, do more.
Yeah, I did 15 times my age. I did about like 450 or something like that a month was what I budgeted for. And I actually am getting a new policy. I have my application call scheduled for tomorrow.
How many is that? Is that 3?
Yeah, that'll be technically my third, since I have one for me, one for my daughter, and then I maxed her out, so I can't get any more until I get more coverage. So then I'll eventually get. It technically means 4 is around the corner, but yeah, so 3 and 4.
I did about 377 times my age.
Well, shit! I wish I was like you,
And
Joe.
Joe's really old, so I mean that's ancient stuff.
I was calculating it up.
That is too funny.
All right, so Vince again, Evan.
Oh,
So he's
What?
We're talking about. Oh, where'd he go?
There he is.
Peekaboo.
Comes back playing games.
We were talking about somebody that says 10 times your age, and then I calculated. I said I did about 377 times my age.
Love it. So Vince is saying, I really believe in this whole process, but as a first timer, what portion of my pay would make most sense to start out with? Currently, I save 15 to 20% of my take-home pay. That much. Honestly, you have a great discipline, is what we would say.
That's perfect. Spot on. Yeah. Very good, Vince.
I don't know why he hasn't said
Multitasking.
Okay. Actually, so to this point, David's asking, hi guys, just a question. How many policies can you open?
Well, I mean, how many's Brent got now? 28, 29? I mean, but those aren't all on his life. Some of those are on other, like he sold some of his practices. So some of those are, on the owners that he sold the practice to because he had an insurable interest through the contract. I suppose really, I don't know if there's a number that is a definitive number. On your own life, it's going to be capped by your human life value, which is your capacity in the future for income and assets based on an insurance calculation that would give you your human life. And it's a moving target. But how many can you have in your lifetime? I mean, I don't know. You could have one on all your children. You could have one on your parents. You could have one on your spouse. You could have one on key employees in your companies. You could sell a company and have one on the person you sold the company to during the period of the I mean, there's so many variables. So it goes far and wide.
Yeah. No answer.
But you probably wouldn't like open a bunch on the same day. Like
Oh, no
mostly
way.
you acquire them over time.
1, 2 at the most at the same time. And that would only be if it's a husband and wife who are both like breadwinners and income earners in the family. And you're trying to just kind of take, hey, we want to save X, but we're going to split it between the two of us because we're both income earners. We both want to protect, the death benefit protection on both of us should something happen. We don't want this plan to fall flat on its face because I got coverage and he did or she didn't, or he didn't. And now all of a sudden he's gone. I can't afford to continue saving. So, it really, so much of this stuff just comes back to the Rockefeller system that they do. I mean, it's pretty simple, but basic. You just make sure that anybody in your family bloodline has a policy on them and just make it mandatory. And then have all the beneficiaries be a trust. And then that trust fuels future purchases of policies on future generations of family members.
I love it. Okay, so Jay came back with like the best information so we can figure out his original question. So he had high interest loans, and he used the second lien HELOC to pay off those loans. And the difference between like the loan payments he was paying before to now, he has an extra $800 a month in that surplus. So would it be beneficial to open up a policy with that $800 or pay down the HELOC, make additional payments to the HELOC? Was his main question.
I would leave this one to Joe because he's the expert in this.
No, go ahead.
No, I'm saying I would leave this one for Joe because this is your expert. This is your area of expertise.
You can still do a one-pot system even though you have a mortgage. I'm glad that you consolidated it with the HELOC because now you took out the high percentage loans. Now, do you have a savings account? Why do you have a savings account? You should take all of that money and run it into the HELOC. We're still going to create a one-pot system even though there's a mortgage associated with it. If you take all of the money from your paycheck and from investments or anything else that comes into the house, deposit that into the HELOC, you're going to see that the velocity is going to take out the actual percentage of the HELOC that you're paying. So the HELOC could be 8% or 10%. But if you're getting paid every Friday or every other Friday, and you're knocking that out into the HELOC, you are actually taking the velocity and moving it down. And the percentage is going to be probably around 2% instead of whatever you're paying, 8%, 10%. And therefore, then after you consolidate and get a good amount of money inside the HELOC, now we can make a logical decision. Can we run that through the policy? Can we put that into an investment? Then that's where I see you going that way. I hope that makes sense.
Good answer.
I would rather see him build up that HELOC before putting it into the
agree.
policy.
I would kind of agree.
Yeah. And then once you're ready, once you have enough money inside the policy to put into an investment, now we can run that through the policy and then put that into the investment. And now the investment can come back and fill up the HELOC again.
Amazing. Okay, there was one question on in Facebook. It was from Nikki Doozy, and I remember like, so it sounds like she she goes, you know, like what could she do with $100,000 if she wanted to live in an RV full time, have $100,000 to like, what could she do with that $100,000 to ultimately pay for RV life?
The Fullers would be it's always my lean in because I've just got, I mean, that's where my money's at. And it's just like perfection, you know, from a lending standpoint. I mean, it's the safest risk I've seen. They're capable, and it's a heck of an interest rate that you receive every month. So have them pay for your livelihood.
What is the interest rate on 100,000? Like
12.
the entry?
12.
12. Okay, so then you'd have $1,000 a month cash flow to pay for your gas, and if you have to park, I guess you got to park.
What are they paying at 500 right now?
What is 14?
What do you want to know?
500 is 14%, right?
Fullers?
Yeah.
What's over a mil?
15.
15.
All right. I got a couple people maybe.
Yeah.
Steven's like, I'll do 3 or 4 of those.
Yeah, I mean, listen, like, let me say, listen, I don't know this to be fact, but I'll let out, you know, like I talk to Rob all the time. You know, I've gotten very close with their family, and, you know, I talk to them all the time, and Rob's working on some huge things because of their size now. You know, they've kind of got capacity to go after big institutional money at lower interest rates. So, you know, one thing I've been kind of saying to some of my close folks is, you know, like, if you're thinking about where to go and, you know, where to place money, and, you know, I would definitely lean into, you know, ROI, you know, properties. Cause like, listen, it's a really good thing. And I'm not going to say that really good thing is going to be around forever. I mean, if they can get money at 7% through a giant institutional bond offering, I mean, do they really need our money at 12 to 15? So I in the short run, the answer is yes. I mean, cause they've got lots of projects, but I would definitely tell people, like, you know, get on the phone with the Fullers, talk to them. If you're thinking or you're on the fence, now would be the time. You can all take that for what it's worth. Giddy up and go.
Giddy up, ready, almost ready. Mr. HELOC.
I have money with Rob. I have money with forklifts. I have money with semis. I like to throw it all over the place.
As Joe likes to say, his right side. That's his right side, folks. And he's got his left side, which is exactly helping you. And now
Chris,
today we created a top side. He doesn't even know about that one yet, but we talked about it earlier. So.
Okay, Logan's journey says, I have my first policy with One America and a loan that I will pay back as per the map provided. Am I understanding correctly that the interest due at the end of the year will be based on the loan balance?
Correct.
Yep. So if you're paying it back over time through your map, you're paying the loan balance down. So at the end of the year, your loan interest will be less than, if you just did a calculation. Let's say you had a $10,000 loan, you calculated it at 5%, right? You know what the interest is going to be. And you're like, okay. But then if you're paying it down every month throughout the year based on a schedule or map, you're actually going to realize at the end of the year, your interest bill from the insurance company will be less than what you thought it was because of the APR going down because of everything we always teach, with recycle, recapture.
Yeah, but I do want to say it's not like, and then the follow-up part was like at the snapshot at that time. So no, you're technically like on day one, you're paying that interest on whatever's out, but as you pay it back, the amount out is less and less. So you're paying interest at all times, but as you pay
On the
it
money that's out, you're paying interest on the money that's out.
Which is why we always say pay, if you pay off a credit card, take the money and pay back your policy because it all benefits you. Like there's absolutely no mathematical reason not to, because it always just makes you more money.
And Logan, it's cool. I mean, with One America, you can go into your dashboard and you can literally just look on there and you can click under your profile and look at how much is available for a policy loan. What is the interest? You can look at all those things. So you can kind of, if you're paying it back, I believe that's going to show you kind of the interest going down, like as the year goes too. So you can kind of track that. Progress equals happiness. So that's a good way to kind of get that system in your head, right? So.
Okay, so Joe, this one might be for you. Is how can I also get in on the semi deals?
I'll get you in contact with Kendrick.
Okay, so you can email Joseph, JOSEPH @chrisnoggle.com.
Joe is not a financial advisor or of any kind.
Yeah, he's just another guy
who's sharing what he is doing currently.
I got a question for Joe. Joe, did he finalize the FedEx deal yet?
He bought the one for 1.2.
Oh, he did.
Yep, that was done with a joint venture, I think, between 5 or 7 people. He now has his eye on another one. He utilized 3 or 4 people to use the truck because there was 4 trucks that were leased inside of that FedEx, and they used them to take out those leases. So therefore, there's truck deal and Amazon or a FedEx deal inside of one play now.
And Dexter's moving down there permanently, isn't he?
I don't know about that.
Okay.
Dexter, you're moving? Okay. So David is saying, I'm in the process of hopefully getting approved. But just in case, whatever the monthly payment would be, can you pay more or just pay what the monthly payment is? Unfortunately, it's just whatever the monthly payment is. You can't pay more.
Yeah,
like, for me, I'm starting a new policy because
I hate when it's referred to as monthly payment, though. You mean the monthly premium? Like I'm literally, when you're saying monthly payment, I'm thinking the recapture. But
no, I think he's meaning his actual
deposit.
Premium deposit.
Yeah. David, change in your mind payment to premium deposit. It'll help you tremendously, and it also help us when we're talking about it because I don't like that word payment. Nobody likes payment.
No, Chris's face, you cringed. I'm like, what's
payment?
I was wondering what you were cringing about. I'm like, if something else was happening.
Who's making payments?
Here's a fun question for you, David, too. Can you put, and I say this every day, every call, can you put 16 ounces of water into an 8-ounce container? Hopefully you said no. If you said yes, then we just can't work with you. I'm sorry. But, if you said no, then there's a future. That just means that we design these so efficiently that you'll be able to put dollars or cents back in on top of whatever the premium deposit that's been designed for you in year one. And so when you have more money sitting around, then you're going to have to open your bank on 3rd Street and the 5th Street and 7th Street. How many banks of Bank America are in your city? Probably more than one, right? So that's your goal, is to get to there. So.
Amen. I mean, I wish it was that easy though, because I just wish I could have the same table rating that I did 4 years ago or whatever.
You'll be fine.
I'm scared.
You are. I don't know
Scared of.
why.
Scared of.
I'm like a little sick right now. Like I don't want my blood taken and
But
tested.
that's awesome that you just shared that, because that's literally what every single person feels, no matter how healthy you are, where you are in life, when it's in somebody else's hands to tell you if you're healthy or not. Like the lady who took my height and weight, she made me shorter and heavier. Right? I'm like, you don't care about this, S, but like, I am not. Like, you added 5 pounds to me and you made me an inch shorter than I've ever been in my life. I'm like, does this affect my table rating? Oh my God, what's going to happen? So we all go through that. So just, that's a cool thing for anyone listening. You're going to go through that. It's okay. It's normal. Even we all think that. Even Carson, who's like 20, 21, he probably wonders, like, oh, I hope I get preferred
No,
again.
he doesn't care.
No, I don't wonder. You guys wished you could get this set up at 22.
My first policy was super preferred. My second policy was standard, because in between I had skin cancer. And I no longer
That's what I'm
qualified
worried
for
about. I was also super preferred, and now I hope I still am. I'll find out tomorrow, apparently.
Well, Snaggy, I thought you got, thank you for sharing that you got standard with skin cancer. That's awesome that you still were able to get that rating. But when you shared that, I'm like, what did you start doing in between? Like, where did you fall off the rails, go nuts? Super preferred to, standard in a couple of years. So
Hey, even I get standard.
Clearly not hard, ladies and gentlemen.
See that?
Oh my God.
There's proof.
All right, we're going to do some rapid fire real quick. So when we take a loan, the cash value is reduced, but we still earn interest on the full amount we've contributed. Is that interest then added to the reduced cash value?
Sorry, actually, there's not coffee all over my stuff. So in case you guys wonder what I'm doing.
Oh, your cash value is actually not reduced. Your cash value just collateralizes the loan from the insurance company. So, depending on how you're looking at it and how you're perceiving it, your cash value is exactly what it was prior to loan. Now, again, there's some variables like direct versus non-direct insurance companies. So we got to kind of fine tune this a little bit, but let's just assume it's one of the companies that we work with that is a non-direct recognition. You take a loan, your cash value is not reduced. Your cash value simply collateralizes the loan, which means it locks up the amount that it's collateralizing, but it doesn't reduce or take away from any of the interest or dividend that you'd be compounding on. So hopefully, I think I answered it right. So you'd be earning interest on the interest.
Sounds smart to me. Well, remember, from the day, no matter which company it is, right? Whatever one of the A+ rated or better mutually owned dividend paying whole life companies that we partner with, that you become an owner in, it is an appreciating asset from day one for your whole life till you are no longer here. So it appreciates, like if it's a guaranteed 3.25%, that's cumulative over the course of the whole year. So it's growing every single day. So when you take a loan out, you can actually go back and look on your dashboard. Your cash value will grow. It might not be a lot, but it's kind of fun to see that you haven't done anything and that money's still growing. I was really weird to be up there by myself, but that was cool.
I loved it.
Yeah.
He said, so then my available loan balance is what's reduced. I mean,
yeah, the loan.
Yeah.
It's just weird wording, but I mean, I think OB Joseph, I think we're kind of getting what you're putting down. We're just trying to decipher through just the way it's worded, but yeah.
The available cash value is reduced. You're not reducing the cash value. Okay. You got two buckets. You got a bucket with your cash value in it and a bucket that's from the general fund of the life insurance company. You are collateralizing, borrowing against your money. So when you reduce the cash value down, then you have, like, if you take half of it, then you have half in your cash value available for a loan, and you have half that's collateralized. When you fill it back up, it takes that collateral off of it, and that money's available again. I want that to be simpler.
Securities Mutual is a non-direct. You're good.
There you go.
Yeah. So, but basically, yeah, what you can borrow whatever's there. So if you borrow all of your cash value and then it's all out, you can't borrow anything more. You make a payment, you put $1,000 back in that cash value, you can take it right back out. So I don't know if that helps you anymore there. And then Francis Park is saying, can HELOCs be on investment properties?
Yes.
Great question.
But can it be a first lien HELOC on an investment property? I don't think so.
Well, I'm not going through my Bank of Tennessee, but you can go through. Craig goes through CNC or something. I forgot the name of theirs in California.
I like this question. How do I find other survivors in the zombie apocalypse of the mentally dead?
Go ahead, Shauna. You like the question. You can field it too. That's a good
It was, we're doing rapid fire. There is time to answer it.
Well, that you come to what the F happened, because we're, that's where we talk about everything that's real, and we're not just zombie sheep following along the mainstream media.
We're not sheeple. That's what Snaggy's saying. We're not sheeple. Come here to think.
There's a lot of zombie mentally dead people in this country and world. I promise you that. So get around the right people.
Yeah, maybe the zombie apocalypse is happening now, and the mentally dead, we're the mentally undead.
I think it happened in 1918.
Well, clearly, turn the news on. The dude shows you we are in the zombie apocalypse. I mean, that's the dude's
It has
the
been
zombie.
since 1918 by design, right? You take the kids out of factories at 7 years old, and you put them so you can work the kids till they're 7 years old, right? And you're getting all that productivity. You're making money off the kids. Why not put them in schools, teach them to be compliant, teach them to be good employees? Now you make money over their whole lifetime. And then you make up a mythical retirement age that everyone locks into, and they look out in the future, and there we go. We're zombies from 1918 till today.
That's crazy.
Interesting.
This is actually a really good question too. While we have a few minutes left, is Dennis is saying child policy. Can the child policy be more than the parent policy? So the answer to that is no.
Never.
Half of the death benefit. Oh, I have to go.
You're right.
Oh,
Bye, guys.
Bye.
bye, animal. Take your animal with you.
Yeah, Joe.
Animal used to give Connor nightmares. I just found that out the other day. So that was
Oh
fun.
no.
Yeah, I had no idea. Here I am. Look at the Muppets are cool. Look at Animal. Poor kids having nightmares.
He knew how to
All
party,
right.
man. He knew how to party.
I think that's it. We did it. We're 2 minutes in.
Wow.
You're 2 minutes from the top. So
Very cool. Wow, that's a lot of good questions. I mean, me and Steven had to pull out and do another little meeting for one of our private funds and jump back on. So, wow. Great job. All right, folks. Thanks, everybody.
Such a weird. So I was going to say, this is such a weird January. It's like we have nothing we've been promoting. Like usually we have an event in January,
Well, I'm going to promote getting on a call with our team right now. So let's see, there was Vince. Vince is 37. He's got $40,000 saved, or I don't know. He saves 15-20% of his income now, and he wants to get a policy done. So like somebody like that, anybody who's in that frame of mind who wants to get started, I just put the link in the chat. We're definitely able to help you.
Hey, Shauna, are there any more openings for the experience? Like, are there any more 4Ps available?
Technically no, but if you wanted to, I will allow it. So yeah, I'll say yeah.
Okay, cool. I think my internet's
Mama
running
Bear's
kinda
in
slow
charge. She's making up the rules as we go. Nice job. Well, a great show, everyone. That was a lot of fun, like always. Is anybody even drinking today? It's Chris. Do you have a beer?
Water.
Everybody.
Coffee, man. I've been getting up so early to hit the gym so that I can make it back for Vivi. That like literally, I haven't really had. I've been sick forever. Like, so I've just going coffee, man. Coffee and water. And I got kind of like Carson. I got one of these things that salts energy thing that I put in my water. How boring, man. That's what life has become.
No, you got to stay hydrated, man.
No more bourbons or old fashions. We're getting excited about freaking hydrating special water with super salt.
Yeah, I've got my keto friendly hydration, right, that I can do too. So like if I'm fasting, I can still hydrate. So important stuff.
Wow. All right.
Ooh, Orlando.
That's gonna be a good.
I know
Yes.
somebody in Orlando. The city beautiful.
Please come to the experience. You can do 4Pay payment option right now. It is available. Thursday, Friday, Saturday.
Ooh, I will be excited to see you guys. That's gonna be awesome.
Yeah, experience an Orlando experience. I mean, it's definitely going to be freaking off the charts. They always sell out, you know, and you know, it's like we haven't really been talking about it. Maybe we should be, but if we talk about it too early, then all of a sudden it's gone, and then we can't talk about it up to it. So kind of a catch-22. Nonetheless, we are a wrap for Ask Me Anything Happy Hour. So, folks, we will see you soon. Make sure you go and get your tickets for the experience so you don't get left behind, because that would suck. See you next time.
Mhm.